Hey guys, welcome back to another video. I know it's been a long time, I'm sorry for the short break, but we're going to get back into the swing of things of getting out 2 to 3 videos a week. In this video, we are going to go over how to trade the lower time frames as requested by one of the members in my free Discord server. Just before we get into it, make sure to subscribe, give this video a like, follow me on Instagram, and join my free Discord server if you haven't already. So in order to trade the lower time frames, we need to understand what the lower time frames are and what they consist of. Essentially, the lower time frames are the 5-minute and lower time frames, and that makes a lot of sense, right? Because they're the lowest time frames you generally want to enter from, especially since the rise of smart money concepts trading. And those of you that are now trying to enter on the second time frame, smart money trading and lower time frame trading has become more and more popular. So let's see how you can take advantage of trading the lower time frames using smart money concepts. So firstly, we need to understand what are the types of price action we can see on the lower time frame. The first type is impulsive moves. One example of an impulsive move on my screen is this one here. So price will move very impulsively without a confirmation into a certain direction. Now, another type of move that price action will give us is something you guys should already be familiar with called order flow. Price moves very nicely in a very structured manner to a certain direction. So whether it's moving up or down, it will move with order flow to its destination to either fill an imbalance or to a demand zone or a supply zone. And finally, we have accumulations and distributions. So that's when price is generally looking like it's consolidating, when actually it's accumulating or distributing to move higher or lower. And that generally is something like this, where price is essentially just consolidating. So now we know there's 3 types of price action that we can see on a day-to-day basis on the lower time frames. We need to ask ourselves, how can we take advantage of this and how can we get into trades? So obviously with top-down analysis, you need to know what price action is doing from the daily time frame all the way to the 4-hour time frame, to the 1 hour, and then to like the 30-minute and 50-minute to give a good idea of where price overall is trying to go. Once we understand this, we can start to mark out structural points and we can start to mark out imbalances and supply and demand zones that we need to be aware of. Okay, so without going into too much detail, let's start off with some top-down analysis and then work our way onto the lower time frames to see how we can get an entry on a trade. Let's start off here. So as we can see, I've marked out structural points. So price is moving to the upside, right? So we're getting a low, a higher high, a higher low, a higher high. And at this point here, we'd expect a higher low. And we know it will come in around or within this price leg. So essentially what we want to do at this point here, we want to move down to lower time frame. And now let's go to the 5-minute. So what I'll do is I'll focus this video on the 5-minute time frame, and then you can tailor that quite easily to using the 3-minute and the 1-minute. Same sort of idea. So when we come here, we know that, right, price has made a high, it's pulled away, we're in the Asian session, we come to London, pre-London, and we know that price should pull down lower and give us a proper higher low, as it does over here. Taking into consideration the type of price action we understand we can see on the lower time frames, impulsive moves and order flow, we are waiting to see one of them. And as we can see, we don't really get much. This is quite choppy and it doesn't really give us nice order flow, and we get pushed higher. We can say that this is a London sweep. Price has taken Asia high, then taken Asia low, and then it pulled up, grabbed liquidity here, and now we are pulling down. So now towards the end of London session, moving into the New York session, we can start to see we get some nice order flow. Now let's say we get a couple confirmations. So we allow price to take this low here, we allow price to then take this low here. So now from this point onwards, during the New York session, we are now looking to take an entry on a trade. So how would we take it? So we've got one confirmation, which tends to be quite risky. We get a second one. Now we're a bit more confident. Okay, price is going to move down. We understand that price has made a high and it needs to make a higher low at some point. So we can expect price to continue to the downside. So what we do is we look at where price is and we mark out the low, and then we can put an arrow there and we wait for that low to be broken. And then we look at the order block or the supply area that broke that structure. As we can see, it's this area here. So this supply area here. If we pull that to the right, we can see quite instantly we actually do get tapped in. And that's what we want to do. So we'll put an entry over here very nicely. We get tapped into this position. Stops will be just above, so it's at 5.5. Let's add 0.5 for spread, so 6, and then we can see we get a nice trade out of it. As you can see, if we held this trade, we can get a nice 1 to 5 very quickly and very nicely. And that's us taking advantage of order flow. That doesn't mean we can only take one trade. Order flow gives us many entries for a single trade idea. So if I keep this one over here, just so it's a bit more neater to see, what we can see is price comes up higher, pulls lower, and we're waiting for this structural point here to be broken. It gets broken over here. Price comes up, we will mark out a supply area, which is this order just over here. As we can see, we get tapped in. Stops just above 5.7. Let's go 6.3. and we get another trade as well. This one doesn't get to a 1 to 5, but with correct risk management, I'm sure you take profits at some point, maybe trail your stop somewhere. And as we can see, we get multiple opportunities to enter a trade. And that's why trading on the lower time frames using order flow is such a strong, repeatable process that you can come to and look for. The only thing you need to know is where is price likely to go. Once we understand that, then we can take advantage of it. Now, the other type of trade you can take using the lower time frames and using the more impulsive type of move that I was talking about before is something along the lines of this. Using the same example, we can see how we can also trade the lower time frames using a variety of confluences in a trade idea. So if we look at this trade setup straight away and we start marking out supply areas and demand areas, we know that price needs to go down. So this is the same example that we used before for the order flow example. So this is where we'd enter on the order flow. So what we're looking for is a clear imbalance and a supply zone. So we can see we have an imbalance over here, and we can mark out our supply zone to be this area over here, and we can move it to the right. Obviously you can see where the trade comes from, but what is the criteria behind the trade? So the first piece of criteria is we have a buildup of equals just over here. Okay, we also have equals to the downside. So Asia low hasn't been taken properly, nor has London low been taken. Okay, so we know there's a lot of liquidity being built up in these areas. Price moves up, grabs liquidity, taps into this order block to the left, which we know is a higher high. Price is going to be sent lower to create a higher low, and we can enter our trade over here. Now, of course, this is a riskier trade to take because price doesn't need to give us a 50% or lower higher low. It can just continue moving up, and this is obviously a bit more of a riskier trade. But if you have a good understanding of the market and you're like a flow type trader, let's say we just keep this trade at 8 pips in terms of a stop loss, we can target this and we get a nice 1 to 5, and with the expectation of a 50% retracement, we can get a very nice trade. Now let's see that 50% retracement properly. We can see that using that and targeting the 50% level, we'd get a nice 1 to 7.88 trade, and that's using a quite fair amount on top for the stop loss. So as you can see, trading the lower time frames, there are quite a few different methods. So this one's a pretty nice one, but this one requires you to be very structurally orientated, and the previous one is pretty nice because all you need to do is understand where price is going and you can just jump in on order flow. My personal favorite out of the two is actually the order flow one. It means I can get into more trades and I can just jump out really quickly. The trades are over very fast. I hope this video has been informative to you on how to trade the lower time frames effectively and how to understand the price action on the lower time frames. Make sure to subscribe, give this video a like, follow me on Instagram, and I'll see you in the next video.